So two of the biggest expenses you're going to face in retirement, one of them, I think we can all agree, is going to be your healthcare. Number two, that a lot of people don't think about though, is taxes. So at Stonebridge, we created a tax calculator. It's stonebridgetaxbill.com, and it'll give you kind of a 30,000 foot view of what taxes could look like, if you've put money in 401ks, IRAs, things like that over the years. A lot of us are told when we retire, we're going to be in a lower tax bracket. What I can tell you is a lot of times we see it differently. You're paying a lot more taxes in retirement than while you're working. So I'm going to run through the tax calculator with you today and show you the report that it'll produce for you. It takes you a couple minutes to enter your information, and then it'll print a nice report for you. So we'll start here. You're just going to enter your name. So we'll just use a test email. Now, keep in mind, you do have to put your email in there. Otherwise, it's not going to send it to you. 867-5309. That's John Turnus's phone number, if anyone's wondering. I'm 60 years old, and let's say I've got $1 million in my 401k. Now, the next thing is assume tax liability. So when you think about taxes, do you think taxes are going to go up, or are they going to stay the same? I think they're probably going to go up. I'm going to use a 32% tax rate. So we got that at 32%. Assumed growth rate, if you have your money in the bank and you're earning in a money market 3% right now, keep in mind you're not keeping up with inflation, but we'd want to adjust that down. So I'm going to put 7% here. And then we're going to have to put in, how did we hear about this? So I'm just going to say online and then view my tax analysis. So the next step, it's calculating, it's running all the numbers to see what your tax situation looks like if you do nothing. So this is the report that it'll spin off. So strategies for managing qualified accounts. We start with all of our inputs. So your personalized scenario, we've got $1 million in the 401k. Our assumed tax liability is 32%. Assumed growth rate of 6.5%. Required minimum distributions, that's on the left here. That's the first step, the first thing that we're going to look at. So what the government's telling you is you've deferred long enough. It's time to start paying tax on these IRAs and 401ks. So over your lifetime, if you lived to 95, you're looking at $1.2 million in tax on your required distributions. Now, if you're like a lot of people, maybe you don't need that required distribution to live on. So you reinvest it back into the market. This is assuming another $569,000, $570,000 in tax over the rest of your life. The last one, and this can be very, very expensive as well, is something that's fairly new. It's something that changed a few years ago, and we're talking about beneficiaries. So when you pass away, if you've got $1 million in your IRA or 401k, and your kids are your beneficiary, they now have 10 years to take that money out. So in this case, estimated account value at death taxes, that's another $730,000. So what this individual would be looking at is $2.5 million in taxes, which I think is pretty alarming when you look at $1 million account value that we're starting with. Obviously, that account's going to grow, and you're going to have to take money out of it, and you're going to have to pay tax on it. So kind of a big topic right now is Roth conversions. So that's what we're illustrating here. And I'm not recommending that if you have $1 million 401k, that you go convert the whole thing in 1 year, because you're going to pay tax on all of it in 1 year. What I do recommend is having a managed approach where you're sitting down and looking at your tax situation every year to determine, if you're in the 12% tax bracket, maximize that 12% tax bracket, get to the top. If you're in the 22% tax bracket, maybe you go up into the 24% tax bracket, because that's just a 2% increase. But that's where we dial it in and start looking at year to year. This again is your 30,000 foot view. Gives you an idea of, over your lifetime, how much am I looking at paying in taxes? So when we go to the next page, it's giving a breakdown of what that looks like. So if I'm 60 today, have $1 million, and I put in a 6.5% rate of return, you can see the IRA account balance growing here. When you turn 75 if you're 60 today, your required minimum distribution age is 75. This column is your RMD before tax. So that first year, $98,000 is what you have to take out. After tax is $66,000. So, and then you can see your IRA account balance. And then it's assuming that you're reinvesting that RMD. Now, the one thing it's not illustrating is let's say this individual was living on Social Security alone. So they would have been in a position where they're probably not paying any tax on their Social Security. If they take $98,000 out of their IRA, you're probably going to be paying tax on 85, up to 85% of your Social Security. So that's not accounted for here. So another tax that has to be considered. We also have to look at the relationship, that RMDs or any IRA distribution has with long-term capital gains and how those are taxed. So again, I'd recommend going to stonebridgetaxbill.com to run this report for yourself, just to give you an idea of, is it something that you need to worry about? And I would say if this number, if you run this report and this number is more than 50,000 different, your total tax, if you do nothing compared to converting to the Roth, I would recommend getting a second opinion, having somebody take a look at what you're doing to see if you could save some money in taxes. Again, stonebridgetaxbill.com, or you can scan the QR code